Thank you. Thank you very much. Hello, everyone. Great to be here. A great honor to host this panel today. Thanks a lot for everyone being here at this hour. As Tanja put it yesterday, a graveyard shift. Yep. So we are going to talk today about scaling mobility startups in Europe. So before we start, we do see the names on the screen, we do see the titles on the screen, but still, I would like to ask everyone to introduce yourselves and tell within a minute what exactly do you have to do with mobility startups. And if you are a mobility startup, Christian, you can just tell what exactly your startup is doing. Starting from you, Tanja, please.
From me, okay. I've been investing in mobility startups since about 2009. First investor in my taxi. I've been a VC most of my life, but for the last 6 years, I've been focusing on smart transportation energy, ran an accelerator called Startup Bootcamp in that vertical, helped a lot of big corporates like Daimler, Here Maps, Kuehne Nagel, Cisco, et cetera, on their digital transformation and bridging that terrible dichotomy between corporates and startups trying to work together. So I can write a book about that, and there'll be tears, and we'll talk about that a little bit later. Now I think I've found a model that hacks that dilemma between corporates and startups in automotive, which is probably one of the toughest areas next to medtech. So that's what I do, and I still invest, and I look for mobility startups across the world.
So you may as well be the answer to our today's question.
I could, or I could be the detriment to all of this, but I'm back on the dark side now. Actually, I have to tell you, I do work for a corporate. I'm part of the Volkswagen Porsche group.
Okay, so we have 30 minutes to find out whether you are the evil or the good
exactly
in this. So, Jean.
So you may wonder what a public affairs guy is doing with us. In fact, it does make sense because when we are talking about new mobilities or urban mobilities, we are talking with cities. And in order to help to propose the right offer and the right services, we are also investigating and looking for startups. And the group, on the last 4 years, totally transformed itself from a car rental company to a mobility service provider. And for example, we do have Scooty, which is a scooter sharing, not the trottinette, not the patin, but the motorbike is scooter. And we have Ubico, car sharing, we have some car clubs, electric vehicles car club in the UK, plus platform, plus so-and-so, plus so-and-so. So we are part of the ecosystem. And we are always looking for innovation, always looking for new opportunities, new ideas, because we need fresh ideas.
Right.
And to wrap it up, I'm Christian. My journey in the mobility space started with Lufthansa, a German airline, where we set up the innovation hub in Berlin, really connecting the airline to travel and mobility innovation. I then spent a little bit of time with Uber. Back then it was far beyond startup stage, 15,000 people company already, and our role there was to build a developer platform to connect to other mobility applications. And since about 2.5 years, we're building Xapix, and we're working with mobility companies of all sorts, mainly automotive companies, mobility services companies, to help them partner at scale and use, access, and monetize their data at greater scale than today.
So we got here 3 very distinct, I would say, perspectives on the mobility industry and 3 different points of view. So before we actually go into the topic, another general question just to set the stage here and to understand what we all think about the industry itself. What is mobility? How do you define it? What are the main trends that you are seeing around right now? Starting now from you, Christian.
I think for me, mobility captures everything, everything moving in the end. So I have a pretty broad understanding of the term itself. Obviously, there are a couple of key trends within mobility. I would say scooters as micro-mobility trends is definitely one of them, where the industry is trying to find out what's actually, I guess, economically feasible and whatnot, with sort of the new technical advancements that we have. And then all the way reaching to the other end of mobility, sort of the traditional transport means that we have today, how sort of the interconnection with better experiences can happen there. I think in the end, from our perspective, we're taking a pretty deeply technical look at the industry. There is always around how do you get all those different players connected and make sure that it's not as a blocker as much anymore, that folks 20 years ago made certain decisions in their IT and their architectures that should not impede the innovation going forward as much as it does today.
So you would say that this interoperability and connectivity is the trend for you, the important one?
I think so, because in the end, it's not about the design of the car. It's not about the design of a scooter or the performance of a scooter. In the end, it's about how do I get from here to the party tonight, and what's the most convenient way for me to achieve that. And I think that's a pretty drastic mindset shift, because as a user, I don't necessarily care about the brand in terms of like a vehicle or transport mode that I'm interacting with so much anymore. But it's really about how is that trip effective and how is it an experience that I actually enjoy. That doesn't necessarily mean I'm getting beamed there. It doesn't have to be the fastest.
That'd be cool though.
It'll be cool. It doesn't have to be the fastest experience, but it has to be the most enjoyable experience for me as a user.
Sounds about right. Jehan, what are your trends? What do you see?
So what we see is obviously the fact that there is a movement from the ownership of the vehicles, whatever the vehicle, to the sharing of it and the usage of it. And what we see also is that one single player cannot make everything anymore. So we are moving from pure competition to much more collaboration, including, by the way, shall we have the consumer or shall we be the operator? And in fact, we are all partnering together now, and this is a very strong evolution in my opinion. In terms of tendencies, we see, of course, the autonomous vehicles, the electrification, the connectivity issue, what we call the MaaS, the mobility as a service. And at the end of the day is what and how are we able to provide to the consumer the full potential of mobility, including the micro-mobility, in order to make our life better, safer, and to propose a real added value to the consumer. Because at the end of the day, we will not be in the position to impose something, but we have to propose something that is making sense for the consumer.
Tanja, you've seen hundreds of different startups. What do you take? What do you get of it?
Well, so the way we would define mobility would be to say it's the efficient and effective way of moving people and goods in the broadest of all senses. But looking at it, I love it. I'm fascinated that I get to be a part of this automotive world, because it's literally eroding their business from every angle. It's really fun. So the key trends we look at are basically something you already touched on. We call it CASE, C-A-S-E. Connectivity is a big thing in cars. Autonomous is going to it's going to really eat away at their business model, and I'm fascinated by that. And then obviously sharing, all the sharing economy we've seen. And then also this new thing in terms of electrification. So if you look at all four of those buckets and you look at the amount of transactions that have happened across the world, sharing has decreased a lot because we've seen so many models, right? From ride hailing to car sharing to micromobility. So the sharing thing is kind of done. So investments are sinking in that space. But if you look at areas in autonomous, that is absolutely booming, because that's the next disruptor for the automotive industry, right? That's huge for them, and that whole topic of connectivity and security and infrastructure. And then the next biggest thing for us right now, based on all the regulation that we have in Europe, we need to work on electrification. So probably if I had to put it in timing and relevance and important, I would say electrification right now. I would say autonomous second, connectivity third, and sharing fourth.
Right. For someone who works for a company that is owned by a car manufacturer, you look surprisingly happy about their business models being eroded and eaten away.
I love it. It's so, for me, it's fascinating because I've been working with startups for 21 years. And I'm always, and my good friends here in the first row, our fellow accelerator people, we love startups. We want them to succeed, and we hate corporates because that thing usually doesn't work, right? The first kiss of death of any startup is working with a corporate. So then we would go out there and say, well, can we make that better? And then we tried, and it's great. And corporates do paid pilots with startups. Or they see fantastic business models and like, oh, that's awesome. I'm going to go back to my lab, and I'm going to copy that. So this is like one of the big pet peeves I have. Like, don't bite the hand that feeds you, but Volkswagen is great at it. They look at a lot of business models, but they don't invest in startups. They go back and they do it themselves. So I'm absolutely blown away by the fact that now, knowing so much about deep tech and automotive, they cannot do that any longer. They cannot work without startups. They may not like it, but the startups are basically disrupting and eating them for lunch in all areas that we touched upon. So.
Right, this is great. So let's move finally to the topic of the next 20 minutes, and that's scaling. And starting from you, Christian, so you are an actual mobility startup who is now about to scale and is scaling already. So you are a European startup, you founded in Germany, but you are living in the US and you are scaling pretty much there. Why so?
I think for a couple of different reasons. So when we started the company, we directly started in the US, actually. So we started with a US entity in that sense, because for us it was clear from, in that sense, the zero onwards that for really getting to where we want to be, or getting towards our vision, we need a lot of support along the way to scale. And on the investment side, it's easier to get that, I guess, in the US or in China at larger scale than in Europe. At the same time, we soon after actually built a European legal entity under that to also, in that sense, benefit both from like all the great things that we have in Europe, which is talent, which is, I think, government support to a certain extent, and then also market access, because in that sense our customers asked for having contracts rather with a European entity than a US entity. So for us that was a push in that direction, but what keeps me personally in that sense, in the sense of where I spent my time a lot more involved in San Francisco than maybe in Berlin, is that we have a problem in Europe around the ambition of companies. And the traditional companies in that sense are incredibly unambitious. And if we look at the press, I think last week, Moya, one of Volkswagen's subsidiaries, celebrated, in that sense, the launch of 5 autonomous vehicles in Hamburg, which will sort of on a 3-kilometer track be testing the vehicles, which is a great lab project. But if we look at the stats just in California, Apple has around 120 vehicles on the road, Cruise has about 140, Waymo has about 150 vehicles on the road, and they're operating on orders of magnitude more than 3-kilometer tracks. Right. And I think that is like what drives startups who want to get into that market quickly out of Europe right now, unfortunately. At least in terms of mindset to a certain extent, because for us, if we want to go big and get there anytime soon, it'll probably not only happen here, unfortunately.
Right. Jehan, Europcar, how unambitious are you feeling right now?
I love this one. This is perfect timing at the end of the day for us, because in fact, we invented car sharing, not the technology. We did that 70 years ago. And since what is requested and what is the challenge is to operate the fleet. And we are the expert with fleet operation. So we have the perfect combination, and for us it's not a revolution, it's just the evolution of what we know already on what we are expert on. So there is no real issue, except that there is a big one, is that we need open data. If we are not working within an open data environment, there will be no innovation, there will be no competition, and it's going to be a very, very big issue. So we need some regulation, we need standardization, and for us, as a car rental and a new mobility player in terms of car sharing, we need access to the in-vehicle data, which is definitely a challenge because there is no standardization, and today it's clear that the EOMs are protecting themselves, and it's not good for the market, it's not good for us, it's not good for the startup, and it's not good for the end consumer at the end of the day.
And yet, do you agree that there is this lack of ambition in terms of the scale that you think of your project?
No, we don't. No, because we are buying 400,000 cars a year. So the scale is not an issue. We already have 35,000 connected cars. So we can scale up very quickly. And we also have the network. So the network is very important because what is one of the blocking factors today from the different players is the fact that they do not have access to the network, and in terms of operational issues, it's definitely a nightmare because if you need to pick up the car, transport the car, and in terms of operational cost, it is a nonsense. So we do have a lot of advantages, and we can really scale up quickly, and we can also help startup to scale up quickly. And for that, it's probably the second part of the question, or your previous question, sorry. For that, we totally changed also the company because since 4 years now, we have a lab. So we are investigating this startup world. We also changed the management with CPO, so Chief Product Officer, and CTO organizations to be much more agile. And we are participating to some programs with the European Startup Prize that Karima presented earlier, with Plug and Play, on here today also. So there are plenty of initiatives we are doing in order to scale up ourselves, of course, but also to find the right partner.
And here comes the lab again. It seems like it's never out of the lab. Tanja, what's your take?
I'm not going to talk about the lab just yet because I want to come back, if you don't mind, I'm sorry.
Go ahead.
I love what Christian said, and it's a combination. I think it's a combination of lack of ambition, but it's also much more driven by the lack of capital. So I pulled out a couple of numbers earlier, and interestingly enough, in 2018, there was 52 billion euros invested globally in auto tech, in all shapes and forms of mobility. And 39% of that actually came out of Europe, which made Europe the leading in terms of the amount of transactions ever in the history of the planet. But if you look at the breakdown of the amount of money where it went to, only 7% of all the money invested was spent in Europe. So that goes to show you that we are just not even close. Asia, I have to look at my cheat sheet, 72% of all the capital in auto tech went to Asia, and then 21% to North America, and the rest in Europe. So that has a lot. That's basically the reason why it's so hard for European startups to scale in that industry. And there's a lot more data to back this up, and I think that's a real problem. So if you really want to scale, you can basically debunk most of everything in automotive. The big players are going to be coming out of Israel, Asia, and the US. And as sadly as it is, in Europe, we have so many regional players. It's extraordinarily fragmented. And just looking at the sharing aspect of mobility, there's a huge consolidation going on at the moment. Sorry, but you wanted to talk about labs, but we can do that in a minute.
Okay, Jehan, you go ahead now, answer this, and then we will move on. We have enough time to discuss this.
No, I was just saying that I fully agree with that, but also the play field is totally different because the regulation is different. I mean, in China, the 3 big cities, they just agreed on one system, and they are now expanding it, and it's the same regulation everywhere. In Europe, you have one regulation per country, and then by region, and then by city. So for a startup, it's much more difficult, much more fragmented, and the rules are not the same.
So this is the open data that you were talking about at the beginning? That we were...
Not necessarily the open data, or the whole regulation by itself.
Or just the interconnectivity of the systems? Okay, that's fair enough. So what will our take on the labs now again?
You wanted to say something about labs.
Yeah, no, I
You
was,
said
I
Jehan.
was, I
Oh,
was,
here we
just
are.
saying, I was just saying that it kind of seems sometimes that all these innovations, all these pilots just never go out of the labs. Just in so many cases, the pilots are not really going anywhere, and that's something that we discussed earlier with you, Tanja. So how do you even solve this part? How do you get this innovation actually into commercial stage out of this pilot stage?
It's so hard. So everybody has a shiny lab, right? We laugh about this in corporate innovation. It's like, okay, I won't rant and rave because again, I don't want to bite the hand that feeds me. But for what I'm trying to hack, and I'm a little bit more successful at it than anybody else right now because corporates and startups in automotive or mobility or in aircrafts at Lufthansa, right? I mean, how can you get a startup to play in the cockpit of an airline? Or how do you let a startup play in the production line of Porsche? You're never going to get there. I mean, you know, the factory shuts down and it costs you $2 million a minute. So what I've learned after all my years of startup bootcamp, to go past a paid pilot, you need to have a technology integration stack because no CTO, no CIO will let you fiddle with this technology, right? So now I'm trying to build a global venture client model where I work for a company that happens to be a really big tech house systems integrator, and if I go to the production guys at Porsche and I say, I've got some technology I want to play with, they'll say, yeah, sure, because we manage those systems, and the same goes for basically just about every IT and infrastructure play. So I've got startups that I subcontract. They don't have to go through the hassle of that nightmare of getting a purchase order and doing the documentation, which they would never get in the first place. But we're talking about startups that have raised 5 million, and we're talking about teams that have at least 50 to 60 employees, otherwise they can't even deliver. And now I'm seeing the flip side of always being so in love with startups and hating corporates. Now I'm also seeing the downside of startups. Yes, they can be integrated, and we're doing this on a regular basis. We don't take equity, we do a revenue share, and if they do that project at Audi really well, I can scale them out by taking them to all my other clients, which are Volkswagen and Skoda and whatever. So that model seems to be working, but the flip side now is startups don't know how to work professionally with really big players. So I'm in a position to hire a couple of consultants, or not hire them, but use part of my team and plug them in there to help them professionalize. Am I gonna nail it? I don't know yet, but I'm trying really hard to make that corporate startup thing in automotive work. And I think what we're building, I've got 7 projects now, and they've all scaled out from 1 OEM to 3, with a really big volume in revenues, so.
That sounds great. So we need more people and more companies like yours, I guess, to solve the question that we have today. So, Jehan, Europcar, how easy is it for a startup to get from your shiny lab into your production environment?
The lab is not disconnected from the company. The lab are not 10 people, 10 fancy people sitting somewhere on their planet. They are just detecting what are the new tendencies and what are the new trends, and they are investigating the different startups to see what could answer some of our issues or which one could help us to develop something that is making sense. So we, most of the time, to be honest, we take some financial participation, but most of the time we just acquire them. The challenge then is just to make sure that they have enough freedom to continue to create some values, but to make sure that at a certain stage it is somehow integrated. And this is really the difficult part. To leave enough freedom, but to make sure that what they are doing is making sense and is scalable and then can be industrialized into what we are doing. And this is really the challenge of the lab today, but we don't see the lab as just a few pilots that are no value at the end of the day because they are fancy, but it will be never developed.
Okay. Now, Christian, the startup point of view, you have experience of integration and working with a big corporate. What was your experience like, and what did it take to get to anything more substantial than a pilot?
So in the end, from a startup point of view, you have to realize that your sort of dealing with startups on the other end as well. They're just oftentimes, I mean, the labs themselves have to, I guess, find the business model for themselves, find out where they actually belong in the organization. Our home in San Francisco is surrounded by probably easily 200 innovation labs of some sort in mobility in that sense, and some with more success, some with less success, or it depends on the time as well. Audi just closed part of the lab there, unfortunately. Others are trying out new ways. It's not always easy. I think from a startup perspective, the goal is always leverage them as a supporter, as a champion for us, for our technology. But in the end, the deal is done at the headquarter, regardless of that headquarter is in Paris, in Stuttgart, in Tokyo, or wherever. So it's always that entry point, and in that sense, for us, it's a great entry point, but at the same time, one which we have to get away from as quick as possible as well. I think one of the teams that we interacted with, which I would say has a better than average setup, is probably BMW's startup garage, because I say in terms of the process that they have, they actually support the specialized department a lot in terms of like what it means to work with a startup. They take away like the headache for, let's say we work with solution architects on the IT side, so they take away the headache for them to actually manage us as a supplier. So we can, with them, actually focus on the content. And at that moment, to them, at least in terms of the time they have to put into it, we're similar to a Microsoft or an Amazon that they would be working with. And if we deal with companies where that's not the case, then that sometimes becomes an additional burden, where it's really hard because like we found someone who like puts so much trust into us, and no one's going to blame him for working with Microsoft or SAP or someone if they fuck up. But if we fuck up, then he'll be blamed for sure, or she'll be blamed for sure. And I think that's critical for helping any type of smaller company, whether it's seed stage, Series A, or even Series B or C, to actually help them succeed is to have a structure in place that makes sure the administrative burden is not on the sort of technical champion in the organization.
Right, that makes a lot of sense. Now, I wanted to go back to the numbers that you, Tanja, talked about earlier. No, I don't want. Well, we've had enough, I guess, by now. But I just thought one thing after Jehan said that Europcar tends to acquire some of the startups. Would it be a reason for this big difference between the number of deals and the amount of money that a lot of corporates just tend to acquire startups too early?
So if you look at the breakdown and you look at the three different types of investors, you have financial investors, you have strategic, or financial being VC, and then you have OEMs. And you look at the charts, it's 80% financial. And if you look at, and then there's a little bit strategic, and then the OEM part is so minuscule that if you look at the graph, you can hardly even see it. And that's across all sectors from, autonomous to shared. The amount of money that CVCs are spending is minuscule compared to financials. So it comes back to VC. So if you look at the breakdown, it's venture capitalists, you have the Sequoias, you have the Intels, you have, although Intel's a CVC, I won't count them. But there are so many, even tech stars. If you look at electrification and the amount of investments done, 80% comes from accelerators like Techstars. It's ridiculous. So there's just OEMs. Yes, OEMs are starting to acquire and invest in startups. And yes, in my opinion, the country I can speak for is Germany. I don't know how it is with you guys. We sell startups way too early. We exit immediately. Like, come the first, 20 million, and we're happy. We're like, ooh, and the founders are like, cool, I made it. I sold it to, Schmitz Cargo Bull, woohoo! And that goes back to your point of ambition. So, we're not used to thinking global. We don't have the financial and the ecosystem to think global, because if we did, we'd have to move away, as sad as that is.
Yeah. I think to add to that, from a I think we actually in Europe start acquiring, from a corporate perspective, start acquiring companies sometimes too late. Like in the Valley, you have if you build a good team, you build a product that somewhat works, but it really doesn't find a market. You have as an entrepreneur, you have an exit path, which is maybe not the glorious, multi-million-dollar exit, but in the end, you can say, okay, hey, we have a team of 10 people. We did an equi-hire for 5 million, 6 million. The equity was split somewhere among the company, and you really de-risk the life of sort of the entrepreneurs or those young teams, because they can still get to an okay place and then, let's say, work within a much more well-funded environment and sort of be a product team there. I think in Europe is looking at startups later in terms of acquisition. So when they actually have a product that has a market and they've proven that market. And then, again, it comes to the question like, how far can you go, and what's the level of expectation? Like, are you happy with a 2-digit million exit, which can be a massive win, or are you not happy with it because you actually have the ambition to go much higher, and your investors have the ambition to go much higher?
Right.
It's such a war for talent, right? It's a war for talent. They buy companies whether they like the tech or not. It's literally, at this point, we're just acquiring people that we're competing with that want to work for Google and Facebook. And I mean, it's ridiculous, the amount of money we spend just to get people to work for us. We'll buy the team, we'll buy the startup, we don't really care.
So in fact, we are looking for a startup that is able to tell us when to buy a startup. Because
founders in the room, take note. So we need more capital. So if you're a VC, raise more funds for mobility startups. We need more ambition on both corporate side and the startup side. So if you are a corporate or a startup, think more globally. And we need a better regulation. So if you represent the government, think about opening more data and making it more interconnectable. This is a great way to wrap up this panel. Please give a great round of applause to these great people, Tanja, Jehan, Christian. Thank you so much for joining today, and have fun tonight. Cheers.